How many bank accounts should you have? If you have too many bank accounts, you may find it challenging to track them all. While having multiple accounts can help accomplish and keep track of your financial objectives, each account must serve a distinct function. If you link each account to a specific purpose, you can avoid amassing too many of them. So in today's video, let's see how many bank accounts you should have. So stay tuned till the end. Number 1. Checking account. Paychecks and other regular revenue are deposited into checking accounts for many people. When the funds finally arrive, you may take care of things like overdue invoices and urgent purchases. You may make purchases and transfers using a debit card, checks, a P2P service like Zelle, or an online bill pay provider. Interest is paid on certain checking accounts, although the majority either don't pay any or don't pay much compared to high-yield savings accounts. Getting cash out of most checking accounts is as simple as using an automated teller machine. Number 2. Savings account. An interest-bearing savings account is a kind of deposit account. Compared to standard savings accounts, high-yield accounts often provide more returns. The average annual percentage yield, or APY, on a traditional savings account is below the national average. Savings account rates at traditional banks are often lower than the average. Many people looking for a place to save money are surprised to learn that the highest rates may be found with online banks. Unlike checking accounts, savings accounts aren't designed to have many monthly withdrawals. Depending on the financial institution, you may only be able to make 6 withdrawals or transfers from your savings account every monthly statement cycle. You can use an ATM card with certain savings accounts. Number 3. Money market account. Accounts in money markets and at traditional banks are pretty similar. Both are types of savings deposit accounts, and some of them may restrict the number of withdrawals and transfers you may make each month without incurring service fees. The primary distinction is that with a money market account, you may be able to issue checks to others. Your money market account may provide you with a debit card and the ability to withdraw funds from an automated teller machine. If you're enjoying this video, please hit the like button and subscribe to our channel if you haven't yet to show us your support. Now let's continue. Number 4. Certificate of deposit. So at number 4, we have a certificate of deposit. Investing in a certificate of deposit, or CD, is a safe way to put money down for the long haul. The term of a certificate of deposit is the minimum period that must pass before the CD's principal amount may be withdrawn without incurring a penalty. Compared to a high-yield savings account, the interest on a certificate of deposit, or CD, may be greater since you're required to leave your money there for longer. However, the period and the bank have a role in determining the yield. Online banks that provide other types of accounts often offer the most excellent CD rates. It is vital to choose a period that corresponds with when you anticipate requiring the money to avoid a penalty for early withdrawal, which may range from 60 days of interest at certain banks to 6 months worth of interest at others. The average duration of a CD is between 3 months and 5 years. Bankrate's 2021 bank account and ATM fee survey found over half are free. Free checking accounts don't demand a minimum balance or a monthly fee, so they're accessible to many people. According to the report, U.S. non-interest checking accounts charge $5.08 per month. Banks with vast ATM networks and no overdraft fees provide the best free accounts. Consider account minimalism. Conrad Cicatello, a finance professor at the University of Denver, advises opening fewer accounts. You may desire a checking and savings account. Couples may each have a separate bank account for personal expenditures. Numerous savings accounts assist with multiple objectives. An outside savings account might let you save for a different objective. Direct deposit helps automate saving towards a goal. You may call it Dream Vacation Fund to make the savings objective more concrete. For longer-term aims, consider a CD. A CD may generate greater interest, and the early withdrawal penalty might discourage you from withdrawing money before the account matures. Having different accounts makes it simpler to use funds for another purpose. Different savings objectives may be met with distinct accounts. Multiple accounts are helpful, but watch costs. Easy to locate are accounts with no monthly fees or minimum balances. Any new account should be researched. Read the account agreement, disclosures, and other documents to prevent complications. Before creating an account, ask questions. Tell the bank if you're utilizing an old account to finance the new one. Zero balances might lead to maintenance and overdraft costs. Carefully choose bank accounts. Consider giving each account a purpose so you only open and maintain those you need. If you don't check your accounts, you might incur costs. You may not require a checking account, savings account, or money market account, or CD, but consider a checking account for paying bills and a savings account to reach your financial objectives. Well, that's all for today's video. Tell us in the comment section how this one was. I hope that you found this video interesting. If you want to see more videos like this, please consider subscribing for more. And don't forget to give comments and provide us with your valuable feedback. We'll see you in the next video with some more interesting facts and stories. And until then, stay tuned.